So folks, this conversation is really about getting your business future ready. So we've been in politics and economics, we've been in well-being. The conversation now is from four people who really know what's going on in the marketplace, having either consulted to businesses, run businesses, coach and advise businesses. The regulatory change was only ever about regulation, but it was much more than about, so what do you do to your business to get kind of future ready? And so that is the conversation for today. It's very much a discussion, assuming we were having a dinner party conversation. People can jump over each other, you can vehemently disagree with each other, you can talk to each other, you can do whatever you like. But I'm going to ask each of the panelists to firstly introduce themselves, tell us a bit about you, but also second question is just reflect on one big insight from the advice marketplace in your time. So I'm going to start with Mel. She did an awesome job in Christchurch, and I'm sure she'll do so again. Mel.
Thank you. It's a real delight to be here this morning. After my box breathing, I've got a stitch in my side, and now I'm trying to sit upright on the chair with no back, so hopefully I won't fall off.
Please don't.
Really passionate about what we do for a number of reasons. I am very privileged to act as the head of governance at Compliance Refinery, and I also am really honoured to sit on the board, the advisory board of a multitude of FAP license holders to help them work with and through some of the changes that our industry has undergone over the last few years and prepare them for success going forward. We quite often play a game where we ask people, what did you do before you came into financial advice? Because no one actually made a plan when they were 15 to be a financial advisor. And I was one of those people. Like too many, we had a crisis early on. My husband passed away not long after we came to New Zealand, and I was a young mum with 2 young children. And also, like too many, we did not have a financial plan in place. And so the outcomes for my children and myself were quite different than they might otherwise have been had we availed ourselves of the opportunity to sit down with one of you to work out what if. And as a result, my children did not lose just one parent that day. They lost 2. I had to return to full-time work, which was hugely impactful for them when they were coming used to a new country and a new culture and new schools. And I made a promise to myself then, when I did go into the financial services industry, that my goal was to try and ensure that that kind of thing didn't happen to as many people as I could. I realized very quickly that my reach as an individual advisor was relatively limited, which was what promoted or prompted my move into facilitating, developing, educating, and motivating other advisors. Because it was a perfect selfishness, it meant my reach was far greater than it would have been on my own. But it also meant that there was going to be access to really good quality financial advice for any New Zealander who chose to have it. So that's why I do what we do. People who have worked with us, who have talked to us, I know accuse us of being nerdily passionate about compliance, advice, and governance, and I make no apologies for that. I believe we are in a very service and helping industry, and I'm incredibly proud to be part of the change journey that takes us from where we have been to that of professionalism. One of my observations in terms of advice over the last couple of years has been a real earnestness on the part of advisors who have been in this industry and are absolutely committed to staying in it. It is scary. There is a lot of change, and a lot of it falls outside the things we've been most comfortable doing for a long time. But there are people who can help bring you some peace of mind and give you the confidence that you're there if you're invested in it and if you're committed to making that change. And we've had such a privilege working with a number of those FAP license holders to help them move through that. But my observation is there is an earnestness, there is a genuine dedication and commitment to providing quality advice for New Zealanders in an ethical way.
Mel, thank you. I'm going to head to the other end of the panel and welcome my good friend Don Trapnell he hails from Melbourne, so there are a couple of Aussies in the room. Don and I have had a long-term relationship, and he's had a very storied career, and we're going to hear a little bit now from him.
Thank you very much, Richard. My career started in 1967, and so I'm probably older than most people in the room. Some people in Melbourne call me a fossil. I'm not quite sure about that, but I've known this guy over here for 25 years of those 55 years I've been in the game. And I have to say I am privileged to be here. The theme of your conference is future ready. You're doing things in New Zealand that we never did in Australia. You're actually getting yourselves future ready. I sat down and listened to the FMA speak a couple of minutes ago, and my mouth dropped. My secretary sitting next to me said, "We didn't do that in Australia." And maybe that's why you've got 20,000 people giving advice, and we've only got 14,000 people now giving advice in Australia. You guys really are at the forefront of the advice industry, not just in New Zealand, but also elsewhere. So, where I come from, 1967 I started. My career has spanned both indoor staff, senior management, and I've been in charge of distribution since 1989. I was one of the founding directors of Synchron. My other partner, Paul Rigglehuth, who passed away in 2013, and John Prosser. We sold our interest out of Synchron in March last year, and I stayed on as a non-executive director up until Christmas, in which I then resigned as non-executive chairman. In that time, we built Synchron from being just a small little show for Paul, myself and a few of our mates to the largest Australian financial services licensee in Australia, not owned by a bank or insurance company, and the second largest provider of financial advice in the country. And we actually insured more Australians than any other licensee in the country. So that's probably about it for me.
What's one insight you would kind of have on over that career in terms of where the New Zealand industry is right now?
The New Zealand industry really is poised to go forward in a way that we weren't ready to go forward. As I said earlier, the future ready is a sensational theme for the conference, and when I heard the name of the conference, that was the reason I jumped on a plane to come over here. You guys really are at the forefront of getting it right. We were at the forefront of getting it wrong, and that'll become very obvious as time goes on.
Thanks, Don, and delighted to welcome Anna Schubert from AIA, who's had a pretty rough old few months. So Anna, I don't know that you're a stranger to many people in this room, but tell us a bit about you and tell us a bit about your journey into the sector.
Thanks, Richard. So, Anna Schubert, I had my 27th anniversary of being in the insurance industry last week. Started in 96 at Prudential, went through Colonial, then Sovereign, and now AIA. So I've worked for 4 insurance companies without ever resigning.
Is that a record?
It's a record.
Yeah.
No, actually, I think Sharon's 5. So it's a really amazing thing to have started with the Pru because it was an agency-based model. I worked with the sales advisors in an office and everything was paid for. They had receipt books and rate cards and they had to go and collect premiums from clients. So I was brought in to do marketing, and at that point it was marketing out of a set of filing cabinets which used to take a month to do a mail out. And my role was to actually help them computerise that and get it into a way that I could market. So, you know, if you think 27 years ago, it was you had to collect premiums, you had to do it off a piece of paper, and you had to also write your clients' names out anytime you wanted to communicate to them. Fascinating. We move forward to now, and this industry is leaps and bounds coming forward with technology. I would say if we hadn't moved into EAP just before COVID, what would our industry shape be like now if you couldn't have actually seen your clients face to face? And that was probably the biggest crisis when I went into COVID looking at the industry as we're a face-to-face industry and we use paper. What are we going to do when people still need protection? Who would have thought we would have gone through property booms in COVID when we're in lockdowns? So the financial advisors were resilient enough to actually try something different. that was probably one of my highlights. The other highlight for me in the last few years is the collaboration that's happened in this industry to get to this point, a few days away from, getting into the new regime. Who here was in a study group with other people? Anyone? To do the level 5? It's pretty vulnerable actually having to say to someone, I'm an adult learner and I need to get level 5 so I can continue to do my job. Who came into the industry and actually did level 5 before they actually got a job? Because that's the new face of this industry as well. People getting educated before they even start being a financial advisor and working with other people. But I'd just like to congratulate the regulators, the suppliers, the advisors, the groups. My goodness, they put a lot of support in. So I think this has been, and FSC, there's been a lot of collaboration to get to today.
It has, hasn't it? Mark?
Well, it's quite a tough act to follow, particularly as I haven't been in the industry for 27 years because my career was way less planned. I kind of stumbled around my career and then found myself at the FMA. From that experience, being involved in this Financial Advisors Act transition from quite an early point and then moving across to Partners Life, it's been one of the things that really gets me up in the morning is the great people we've got in this industry. I really love working with the people and getting together in a room like this is fantastic because you just get to meet, you get to see so many great people on a regular basis, and I love that. I find that the major change from the old regime to the new is that the Financial Advisors Act really individualised advisors, and it was all about giving financial advice, and there was really nothing more around it. And we've moved to a paradigm where it's about financial advice under the guidance and under the oversight of a strong and robust business. And there's been a requirement for advisors who in many cases haven't got that background to upskill very quickly and learn about what the requirements are to run a robust business. And I think at the moment we've got a real dichotomy of people who are past that journey and are starting to get their head around that, and there is still there are still a large number of license holders who don't really understand what it means to do that because it's just not their background. So I think we've got a real journey to continue to go on for those businesses, and I think you'll find that as a result of going on that journey, you'll end up with a much stronger business. And I think what really excites me about where we are right now is the opportunities in front of financial advice providers. They are just huge. This change is going to become the catalyst for so much opportunity, and I'm really excited about helping financial advice providers look into those opportunities and kind of decide where they want to go, and there's great stuff to come.
So Mark, is the opportunity because there are so few people that are advised, insured, saved? Is that where the opportunity is, this great latent market?
That's a huge part of it. We are still, as a general population, pretty uneducated when it comes to our financial capability and so forth. And so we're not out there buying these products, yet we in the industry know that they're really valuable for Kiwis. So we have got this huge market opportunity. There's also opportunity in this movement from individualisation to businesses and the economies of scale that offers. And I think we have the opportunity to move away from, I'm a financial advisor and here's my business card and I created this logo on the back of a napkin in a coffee shop one day or over a couple of beers, to thinking more about what the brand represents for my business, and maybe thinking, do I want to continue to be one person in my business, or maybe I want to move to expand. I don't have to, but I might want to expand to be 4 or 5 advisors. Do I want to stay just offering one product type, or can I expand into other product types? So yes, there's a huge market opportunity, which is great and gives us a good foundation, but there's also massive opportunities in the way that we offer financial advice, with whom we offer financial advice, the technology we adapt to do so, and the efficiencies we grab to make that happen. So yeah, there's a mountain of opportunities, not just one, which is why it's exciting.
Awesome. Folks, join the conversation, slido.com, stick in that number, and these questions will fly through to me, and I'll try and get to as many as possible. Right now, we're just going to dive into the conversation around just picking up Mark's point, that value proposition. And I'll go to Mel first. Mel, are you seeing that businesses have rethought how they operate, what they offer, how they offer it, to whom they offer it? To talk us through the kind of value proposition stuff you're seeing.
Yes, certainly, as Anna mentioned, we changed how we worked on an axis in 2020. We had so many of advisors that I'm close to that said, I'm face-to-face, and that's my differentiation, is that I'm a relationship builder. And we suddenly had to redefine that. And the businesses who've really done well have actually been the ones who have mastered that change of being able to create a relationship and a connection electronically or remotely, and have become really fluent at it. Certainly, the events of the last couple of years, and it wasn't just COVID or climate change, which we're just going through now, the impacts of some of that here in our own country, but geopolitical issues and economic issues, I do think it's created more appetite amongst the general financial consumer about risk. And it goes hand in hand with the conversations we're having, and I am a complete vitality advocate, just about reached platinum for the second year in a row, so thank you, Katie. We have got an increased awareness of our well-being, and that it's not just about our physical well-being, it's about our mental well-being. And consumers are starting to understand how important financial well-being is to their overall triangle of what it means to be okay and have peace of mind. And I think those businesses who have really understood that and understood how to connect with their clients by truly understanding what is the thing that you are most afraid of happening and how can we resolve that, are the ones who have actually really thrived and seen those opportunities by actually upskilling their humanity skills more than anything as a result of everything that's happened over the last few years.
And is that, what are you seeing? Because, yeah, I mean, the wellbeing conversation typically was not a financial advice conversation in the past, right? So how's that start to flex that it's a much more holistic discussion?
I suppose the thing that we're now on year 3, coming up to year 4, of bringing AA Vitality into the market, and it's a wellbeing proposition. When it first came in, I think it's almost like doing a U-turn for advisors going, I've been selling Plan B. So has anyone here mentioned Plan B to their clients, which is the insurance proposition is a Plan B? And your whole product proposition and advice proposition is around it being there at claims time. So you look at the claims and you look at the certainty of which product's going to pay out when for what thing that could happen in your life. And that's a large part of your positioning to the client. Then all of a sudden we're talking about this well-being journey and everyone's like, where does this fit in? Because I sell insurance. So I suppose what I'm starting to see is advisors understanding. I was really amazing to see the R&P girls in Christchurch on a Instagram post last week mention Plan A. So it's actually saying, I'm here as an advisor to ensure that you get your Plan A life, that the house that you want, the retirement that you want, your kids grow up is what we're here to do. And in growing up and having all of that Plan A life, that you are living your fittest possible life possible. That's my goal. And should it not happen, then I've got Plan B here as well. Now, it's actually been able to say in your script and in your introduction, what do you need to do, and actually introduce it when you first meet your client. It didn't seem unnatural that I just mentioned Plan A to you, did it? But it's really surprising. A lot of advisors have still got but I don't do something other than insurance or home loans or investments. So I think the thing is clients want this. If you go to a barbecue, and this is my barbecue test of, that's where referrals get given, isn't it? Do we go up to each other going, hey, have you ever thought of dying? Kind of confrontational and might sound like I'm, doing something else. But if it's like the whole, hey, you're looking in good shape, what have you been doing?
Not enough exercise.
Well, there you go. Must have been cutting out on something else. As barbecues, we poke, prod and ridicule each other, don't we? And that's how conversations start. So what we've got to think about is, what are the consumers doing when we're not around? They're talking about their best life. So that's the changing shape that I see. A lot of firms are now becoming client-centric. What I'm saying is, when you're client-centric, think about what actually surrounds them outside of your products and proposition.
Awesome, thank you. Don, I'm going to go to you on that conversation and try and bring in the Aussie experience. There's obviously a lot of not good stuff, but the real proposition change that regulation has driven for the advisors that have remained, I mean, are these the conversations that take place in your practice or around Synchron or around the Aussie sector?
Yeah, absolutely. We're talking about value proposition. I suppose there's two layers of that. One's at the licensee level, the FAP level, and the other is at the advice level. And the big advice I would give to anyone is be different. Don't sit in the sea of same. Don't turn around and have you looking exactly the same as Mark looks, exactly the same as Melanie looks, and exactly the same as Anna looks. You do something different. Anna, for example, was talking about using Vitality. I say do something different. One of the things we instigated was videos. So if I would see a client or a BDM for an insurance company, I would send them a video after it was over. Say, hi, I'm Dom, we just spoke on the phone. And then capitalise on the things that we spoke about on that phone conversation or in that meeting. It was just doing something different at a licensee level, at FAP level. Likewise, look for something different so you're not part of the sea of same, if that makes sense. And by the way, compliance isn't something different. Compliance is something that should be it's ingrained in your body. It's not part of your value proposition. Because a client doesn't give a rat's about your compliance. He gives a rat's about whether you care about him.
I do like that idea of video though, because I mean, for how many of us is actually taking the file note, typing it down, actually quite slow, but you whack a video on and recite what just happened in the conversation. It's faster and it's a really good record. That's a great plan. I'd actually like to ask you, Don, if I can, you have been quite in Australia a lot further ahead of us in introducing education requirements. What impact do you think that had on both the accessibility of advice and the quality of advice in Australia?
Regrettably, it wasn't actually conducted very well. The education piece in Australia has resulted in a person who wishes to join the industry must first do a relevant degree at an approved university. Following that, then they must do an exam on ethics, which is an open book exam, but the book is the Corporations Act, which just happens to be the thickest piece of legislation in Australia. It's actually thicker than the Income Tax Assessment Act. And there are no lessons you can take. And you get a pass or a fail, and you're not told why you passed and why you failed. Then after that, you've got to sit down and do a year of professional service with an existing advisor. How many 18-year-olds do you know that woke up at 8 o'clock in the morning after finishing their Year 12 exam and go, I think I'll do a 3-year relevant degree that ASIC, Australian Securities and Investments Commission, dictates what the degree should be? And after I've done that, I'll sit an open book exam on the biggest, thickest bit of legislation in the country. And then I'll do a professional year, then I'll go and sell some life insurance. Not many people do it, do they? Your exam requirements are our equivalent to RG 146. Josie Vella, sitting over there, is RG 146 compliant. That was a very sensible way of doing it, and that way you enabled yourself to have a basic industry knowledge and then be able to learn on the job.
So just, sorry Mark, I'm going to just jump on you just for a moment because I want to bring Josie into the conversation because I want to explore how do we get new talent and develop new talent coming into the sector. And the Synchron example is this kind of unique case study in the Aussie marketplace, and I see signs of this starting to play here out in New Zealand. So a very warm welcome to Josie Vella. Josie, in my experience, has pretty much been the CEO of Synchron, masquerading as the business manager, but most big decisions Josie had to play on. Josie, tell us about the program that Synchron developed, NextGen. Tell me where the idea came from and maybe shine some light on it.
Well, the idea was basically a necessity. We had an age average in the industry of 58 years, but Synchron was above average. Our average age was 59 years. So somehow we had to bring that average down, otherwise we weren't going to have a business in 5 years' time. So we had to attract young advisors to Synchron, in which a way it became the licensee of choice. You can recruit people, that's easy, but to make it a licensee of choice, you had to attract them in such a way that they wanted to be a part of us, and that was introducing the culture that Synchron had. And Synchron, from the roots up, had a family feel to it, and we took that family feel outside. And so NextGen, our boot camp, was born. We created an environment where we brought in advisors. We used to be 2/3 advisors and 1/3 BDM, so that way we mixed the group up. Unfortunately, with the industry the way that it is, we had 1/3 female, 2/3 males, and we mixed them into groups of 8. We couldn't get 64 people to fall in love with Synchron, but we can get 8 people in a team to bond. Then we can get those 8 teams to bond. And then by the end of the program, those 8 teams bonded with Synchron. We became the licensee of choice. So organically, people were coming to us. We created an environment where they competed, they played, they worked hard. We only had 2 presenters. One was a half-day presentation on technology, which was very attractive to the young advisors. And then we had a day and a half of sales skills. Now, we called them soft skills because apparently sale is a dirty word, but no one ever taught these people how to sell. Now, I'm going to throw over to Don because he has got a great line to this. Don, say it with conviction.
Say it with conviction. Yeah, we have bred an entire generation, you're probably the same here, an entire generation of advisors, that education is so important that they believe it's appropriate to bludgeon their clients into submission with facts and figures. No one teaches you how to sell anymore, do they? And that's what NextGen did. We tried to teach people those basic skills of interpersonal relationships and how to sell. And that was brought right back to the younger advisors in the industry, the under age 40s.
So the program kept going. We had silly games. We made people feel uncomfortable. We made people feel worthy. And at every stage, there was a time where everybody felt important, felt that they did something that they would never have done. Climb a mountain, play tug of war with a whole lot of strangers that they never knew before. Play these close connecting games where they actually bonded. And that's what Synchron was all about. It was about culture. It was about value proposition to our advisors. And that was always bred at Synchron.
Josie, where were the 2/3 of advisors or young advisors coming from? Where did you find them?
We reached out to predominantly our group because by the time we got to year 10 of NextGen, we probably had 150 of our advisors, of our 450, so that's 1/3 of our advisors were under the age of 40. So, quite frankly, it used to book out in 24 hours. The registrations would fill up in 24 hours. And then we reached out to the BDMs and we brought them in as well. But predominantly the advisors did come from Synchron, but at first we would reach out to graduates who are coming out of university who needed something to show them the sexy side of financial planning. And that's what we did.
We were talking last night over dinner, Don, maybe this is a story for you about the iPad NextGen. Do you want to just tell that story?
Absolutely. iPads were first introduced and they were this mysterious thing from Apple. So within 6 months of the iPads being produced, Michael Harrison, who was our company chair at this stage and a very dear friend of mine and Richard's, said to me, "Hey Trapper, I want you to spend a bit of money. I want you to buy 45 iPads. Now these things are $1,000 each, so it grabbed my attention, I can assure you. So we bought 45 iPads and we gave every delegate at NextGen an iPad and we said, day 1, lesson 1, turn it on and charge it up. And we ran the next 3.5 days entirely on iPads. And at the end of the boot camp, every single delegate at that conference or that boot camp knew how to not only use an iPad, but to actually do a presentation to a client on an iPad. As we said, do things differently.
That's awesome. I'm going to just segue the conversation just into tech. Anna opened the door and so did Mark onto the, when we went into COVID, we pretty much switched entirely. Anna, can I just go to you on that? Like, how big a deal was that for advisors that AIA works with?
When just the weekend, I'm just going to give this situation, just that weekend before we went into lockdown, I was at University of Darwin crisis management course. I was kind of like there going, did you put this on just so that we could actually get a relevance in this course? They asked a question. They said, what is the biggest problem facing your business right now knowing you're about to go into lockdown? And that's when I wrote down the statement, my advisors are face-to-face and they use paper, and my BDMs are face-to-face and they use paper and cars. And then you had to look at it and go, well, how do we change this? So we knew that advisors were wanting to still use paper. We'd used e-app, and also using virtual things weren't normal. So we went into a huge, great big, what I would call normalisation push. We started doing MS Teams, we started doing WebEx, we got our BDMs to go and do virtual consults with advisors to show them how to do the e-app online, but also do it in a client presentation using whatever program they had. We normalised it really quickly. And in a way, we also looked at the advice process and went through how to actually normalise the advice process. Why did we have to do it? We had 2 weeks. Because we knew that if advisors couldn't get it normalised really quickly, all of a sudden it would be a push away, like, I'm just going to wait. And if we waited, then we're actually going to have that huge population of New Zealand that will never get seen again when the need has arisen. And that was actually, the need didn't go down. What we saw in the market share stats is actually clients went to the online providers in droves. They did not go away. And then what we saw is that the advisors that actually made relevance and made contact and said, hey, I'm available and this is how I can do it, they actually grew really quickly as well. So I think the problem statement of this industry is, if we all go back to 2020, it was awful. Who wanted to see themselves on the box? It was like, oh, I'm looking a bit bad today. Then as kind of lockdown got, through, I think a lot of us got into the business on top and, shorts and jandals. It was a great work environment, so much so that we now have a lot of, I suppose, New Zealanders that don't want to come back to a corporate environment anymore. They, working online and is normalised.
I think that adaptation was really cool as well for the consumer.
Yeah.
Right? Consumers became so much more open to this
Yeah.
concept of having these engagements online. And
Yeah.
coming from Auckland, where you spend half an hour to go 11 kilometres, it gives you a lot more time in your day and gives you the opportunity to make a lot more appointments. And advisors, I think, are now starting to adapt to when is face-to-face appropriate and when
Yeah.
can I use online and make my business more efficient as a result. So these things turned into an opportunity and recognised as an opportunity have made a lot of businesses far more efficient, which is really cool.
The other thing I've seen is a lot of advisors now are no longer geographically located. So if you've got a really good proposition, you've got really good centres of influence and referral sources, you can be the whole of New Zealand. And that's probably been the other shape that I've seen, is just how wonderfully some advisors have been able to reach more clients.
Folks,
So, Richard, during the COVID, our turnover actually went up as opposed to down. We instigated the first month of COVID a series of workshops called catch-ups, virtual catch-ups. So we invited all our reps to Zoom into Synchron and just talk about rubbish, just to get them used to the idea of using Zoom. And as a direct result of that, now COVID's, well, not over, but let's say COVID has gone into the backwaters. Now COVID's gone into the backwaters. Our advisors are now still using Zoom to engage with their clients who are remotely located, but still the face-to-face meetings for those they can, because nothing beats that. Nothing beats the shake of a hand.
unless you're doing it in Hawaii. Folks, I'm going to wrap this because it is morning tea. It's been a pretty intense and long morning. I'm just going to ask Josie to close on, so what was the legacy of Next Gen inside Synchron?
It was our signature conference. No other licensee ever held a conference such as NextGen, and we were well renowned for it. And quite frankly, it blew our licensee out of the waters. We were top of our game in conferencing. We were top of our game engaging with advisors, and we're extremely proud of what we actually developed. And we developed each conference differently to the next. So the repeat offenders that kept coming back year after year, because I was still under the age of 40, still had something to learn, and that's why it was so popular.
What happened to the average age, Joe?
Well, our average age dropped from 59 to 47, and that was over 550 advisors. So that's pretty good.
Which is an awesome case study, and thank you both for sharing it. Folks, there's been some great questions. I'll just give you a flavour of. How does a business owner grow a business rather than a practice? I think that's a great conversation to have in morning tea. With 20K in to set up a business, what does the pipeline to get into the industry look like from early in your career into career progression, a little bit like that conversation just then. Here's another one. COVID displaced a high number of women. How are women being supported into the financial services sector? Is there a drive towards this? And RIS was here. RIS runs the FSC's Diversity and Inclusion initiative, and there's a lot of work going on in that particular part of the marketplace. Last one, what's the financial services industry? This is a great one. What's the financial services industry view on cultural competency of the country that they operate in? For example, the Treaty of Waitangi. So really good conversation. Thank you for sharing those. Folks, it's about 4 seconds before we close. I'm going to ask each of the panelists one closing question. We've been on about a 7 or 8 year journey. Where do you think we're going to be in 2030 in terms of this sector? And Mel, I'll start with you again.
Well, I can tell you what I'd like a fairy tale ending in 2030 to look like, but it may not be what actually happens. I'm hoping that by 2030, our advisor demographic will reflect our client demographic, so much to the points that Josie was talking about. And I also hope, and this is my second hope, I'd like to see our profession elevated in its status, in the level of trust that it has amongst New Zealand consumers by 2030. I would like my mother to be as proud of me being in financial services as she is of my brother, Dr. Mick. And I think we're on that journey.
Go, Dr. Mick, thank you. Don, 2030.
Look, in Australia, the Qualitative Advice Review has just been finished with Michelle Levy bringing out her report. And she acknowledges in Australia that the pendulum swung too far. And there's been raging changes she has recommended. But the changes she's recommending is stuff that you're actually putting in. So your future is fantastic. I disagree with you, Mel. I think the future of New Zealand life insurance and financial advice is one of the rosiest in the world.
Thank you, Don. And Mark?
This is a topic I really have to kind of keep my answer down as short as I can, because it's something I love talking about as the future and the opportunity in this industry. I think we'll continue to see a spread of businesses from the end of 1 or 2 advisors right up to what we have now with 600. There might be a little bit of consolidation, but it won't be required. I think we'll start to see more businesses developing brands and starting to go out with a solid value proposition of this is what we do for clients that's different from what other people do, and having a real brand story to tell, and having customers that are going, I know who the financial advice business I work with is. I know who my financial advisor is, rather than somebody asking, who's your financial advisor? Oh, I don't know. So I think we're going to get far more engagement with our clients in the long term, and I think in 7 years' time we'll be well down the path of that journey of having really strong, robust businesses that know exactly what they're about, how they do things differently from everyone else. They've analysed their systems and processes and made them a bit more efficient, and made smart use of technology, and they're in a process of having time to dedicate to the business itself to think, how can we make that next incremental change? How can we get that next little benefit out of the business? And the industry is going to thrive.
Thank you, Mark. And last word to Anna.
The client centricity is where I think 2030 will be, where the client is in the middle of your conversation and you've got a partnership with everyone else that supports that client. Like at the moment, you say that a financial advisor knows the most about their client. You know their health, their wealth, their lawyers, their accountants, other providers. But at the moment, it's kind of recorded on the fact find. What I'd like to see for this industry is the professionalism rises, that actually you've got a partnership with everyone surrounded around the client. You're sharing information and your actual clients are thriving.
And folks, that's probably where we're going to leave it. A huge big thank you to our 4 panellists and our very special Josie. Please join me in thanking them.